it's kind of like if you imagine a pond, right? And suddenly you throw a stone in the pond and things start doing, the matrix of the pond is doing this.
Mhm.
So yeah, if gold stays down, prices will start to come down again. I mean, prices of other goods as well. In fact, if you look at the
So
deflation of
gold
the
is the
19
stone, right?
gold is the stone, right? Yeah, and
Mhm.
it's if it moves up, everything else moves up, and if it moves down, everything else moves down as
So the
well.
dollar is
But
sea level and gold is the stone that causes the
yeah,
rivers. Okay.
exactly. And you can. It takes time. It'll take time. If you were to suddenly remove a whole bunch of gold and gold from the system, and gold got extremely expensive, prices in gold terms would go way
If
or
you
near
just
it.
think about the perspective here, what was it 2 or 3 months ago? We were thinking about $85 silver. That's impossible.
Yeah,
Or no, that's not impossible, but it's like it's in a
it's gonna
different
be a while.
universe.
Yeah,
And then all of a sudden it happened, and then we're like, oh my God, $85 silver crashed. Oh my God, we're all
it's
doomed.
all
No,
over. Yeah, pack it in.
no. Yeah.
You know what's funny? I was skiing that day. So on Friday, I took the day off work and I took my son was off school, so we just went skiing. And I wasn't checking anything at all. And then suddenly, I finished the skiing and we are driving home. I check. Oh my goodness, down $40.
Yeah, that's exactly what happened to me because I couldn't. I was offline. I didn't check the internet all Shabbos, all Friday night and Saturday. I'm offline. I don't have any devices or anything like that. I'm disconnected from the world, thank God. And then I open the phone and my kids are, "Where's Silver?" I'm like, "Oh my God."
What's funny is like we don't because we know what we know. Like I'm not worried at all. It doesn't concern me at all. I'm not like, oh my gosh, I just lost a third of my savings.
Well, I think I did. No, no, not a third. Maybe I lost like a fifth.
A fifth of your
I don't
savings.
know.
Yeah.
I didn't do the numbers. But yeah, I lost a sizable chunk of
Yeah.
notional dollar value on Friday. I'm not going to hide that. It's pretty obvious.
But that's the
Uh,
point. The point of our shows was to to teach people the volatility is absolutely expected. So, like
yeah.
that way you don't feel this. I don't feel anything. I feel
Well,
nothing,
Phil,
Rocky.
consider this. You were skiing downhill while Silver was also skiing downhill. And on my way back, I was at my brother's a little bit south of here. On my way back from his house, I went the wrong way on the highway, about 26 kilometers I lost. And I just took the wrong exit. And then I went south 13 kilometers. I was supposed to go north, so I had to go north another 13 kilometers. So I lost 26 kilometers. So I said to my wife, I was like, it's okay. Like, it's symbolic. Silver went down. We're going the wrong way for a while. We'll turn around and we'll go back
Turn
home.
around,
And
go
it'll
the
be
right way
fine.
again.
Yeah. Yeah.
There you go. All right, we
Yeah, I
want to
don't I
talk
don't want to
about.
alarm you, but we went to the gas station and they were out of gas. So we had to
Yeah,
go.
no,
Yeah.
uh, yeah. We had a big snowstorm here, and like the grocery stores do not have standard stock, so it's definitely can see it.
Yeah.
Even the roads are not as like the roads are not as well plowed as they were before. There's definitely some structural problems happening.
Okay. So the first thing we wanted to talk about today was the fact that silver could be in a bubble, maybe of some sort, but gold cannot be in a bubble. And in order to explain why that is, we have to define what gold is and what a bubble is. Phil, I wrote about this on the Endgame Investor. No, or did I make a video on it, or did I do
You made a
both?
video. You did both. You did both.
Okay, I kind of like
I
I've
can.
lost track of what I'm doing. I'm kind of on autopilot. So Phil, how does your brain categorize this information? How do you
Yeah.
express it in your way?
So what everyone has to remember is that gold is the price matrix. So when the price of gold goes up, the price of all other things in the gold derivative, when the price of gold in its own derivative goes up, the price of all other things in the gold derivative also goes up. The system to keep this thing going, the system needs gold as cheap as possible, which is why it was legalized in 1974, I think it was.
1974, yes.
1974, right? So one of the things about something being illegal is that it's more expensive. So
Yeah. Yeah, look at
when they
drugs.
yeah, when they made gold when they took us off the gold standard in 1971, gold was starting to shoot off to the moon. So one of the things they did was to psychologically help convince people that, you don't need the gold, but say, oh, you know what, you don't need the gold anymore. I mean, you can have gold if you want now. We're going to make it legal again, but you don't really need to think about it. You can have our T-bills instead. You should put your dollars into our T-bills, right? Keep the Ponzi going. And so that made gold quite a bit cheaper than it was when it was legal, but it still started shooting up until Volcker was able to really get the Ponzi going in 80.
Bubbles form in assets priced in money. Gold is different. It is the reference point. For thousands of years, gold has functioned as the underlying measure against which other goods are valued. When speculative excess builds elsewhere, stocks, real estate, or digital assets, gold is typically suppressed to sustain confidence in paper systems. This is not ideology, it is structural necessity. Gold rising sharply signals stress in financial credibility. Unlike speculative assets, gold does not rely on future growth narratives. It reflects present trust. That makes it uniquely incapable of forming a classic bubble.
I think Ron Paul was one of the motivating factors behind the legalization of gold. I think I might be making that up. I think it's true.
But that was absolutely part of the scam. Making it legal again was part of it. Being like, oh, okay, yeah, you can have those pet rocks. We don't care about.
I know.
Those
Of
things.
course, they'll use Ron Paul for their own purposes if they can, and they did. And okay, fine. But what are we going to do?
Yeah. And then like saying gold was the price matrix, and the system needs gold is the price matrix, and the system needs gold to stay as cheap as possible. So the other way that they were manipulating the gold price is with gold futures contracts, right? So in the COMEX, they issue a bunch of futures contracts that artificially increases the supply of gold and causes people to think there's more gold out there than there is, and that of course lowers the price. And then of course people start doing the physical redemptions, and then it's revealed that there's too many notes, and the price shoots back up in a panic, right? So it is the gold, because gold is money. Gold moves in the opposite direction of everything else in terms of bubbliness, right? So when everything else is in a bubble, gold has to be suppressed because it is the price matrix. So to make people go, invest their money in T-bills or put their money in .com companies or put their money in cryptocurrency, they have to make gold look as unattractive as possible, so people do not put their wealth back into gold and start raising the prices of consumer goods. So that is where they move in opposite directions. You cannot have, if the price of gold goes up in dollar terms, right? People abandon the other bubbles or the bubbles and move back into gold. So the price of gold must be kept down as low as possible, and the price of gold shooting up right now is a sign of the bubbles popping.
So let me ask you something challenging.
Sure.
Do you think this is a conscious process or a market subconscious process? And if it's subconscious, how does it work? Because I would doubt that it's conscious, because I don't think that anyone in power really understands that gold really is money. They wouldn't be able to tell you why or how or whether it really matters.
Right.
So if it's subconscious, how does it work?
The subconscious part comes from just people demanding the physical at some point. And it doesn't have to be, there's people like you and me who are like, we demand physical, we don't want to trust your notes. But there's also jewelers or, who else takes delivery of gold? I guess just, maybe banks who want to have, assets on, real assets on their side of the balance sheet instead of, more T-bills or whatever. Speculators see the price is going to go up, and so they want to have the physical, and they don't want the paper derivatives.
The way my cousin, when he worked for the CME, explained it, is that a speculator will take a warrant to take ownership of a specific bar instead of a notional bar when he thinks that the price will go up long term, and he doesn't want to have to pay rollover costs of constantly renewing his contract. So he'll just hold the warrant until he thinks that the price is ripe, and then he'll sell it again.
Okay, yeah. So there you go. There are market forces that will, and then of course, if the price really starts going up, he'll be sitting on the bar. He'll change his mind and he won't want to sell it because he's like, well, it's going to go up even further. Even if he's not thinking about gold being money, he's like, well, gold's going parabolic, so I might as well hold on to it until later, where I can get even more dollars for it in the future. So yeah, there are market forces that will pressure people to take and hold physical. It's not just us. It's not just
Right.
the sound money people, but the sound money people certainly have an effect. I mean, I'm hearing total normies talking about gold and silver now. Now they're not
Mhm.
panicking yet. They're just in the hey, this might be a good buy phase.
One reason financial booms persist is timing. Changes in gold's value do not instantly reprice the economy. There is a delay between monetary signals and consumer prices. This lag creates the illusion of wealth, allowing bubbles to inflate. When gold rises, its effects ripple slowly through production chains, from raw materials to finished goods. That delay fuels speculative behavior. But once it collapses, the correction feels sudden and violent. The boom-bust cycle depends on this mispricing window. Without it, bubbles would struggle to form at all.
I was in shul, in synagogue on Saturday morning, and the guy, is he a rabbi? I don't know. I just call him the rabbi. The rabbi of the shul was speaking, and he was talking about the portion where this is right after the sea split, right? And then after the sea split, we get manna from heaven. The saying manna from heaven, we get bread, some kind of thing falling from the sky every morning, and that's our breakfast, lunch, and dinner. So he was saying that the pasuk, the verse on the falling of the manna, says Dvar Yom B'Yomo. We were only allowed to take what we needed for the day. And we're not allowed to hoard it or save it. If we did, anything left over would rot. So, like, God was trying to train us not to save specifically and to rely on Him exclusively. And that takes a lot of faith to only take what you need for the day and then rely on another miracle happening the next morning, that, food falling from the sky in the middle of a desert, and it happened for 40 years straight, like, on a rhythm, 6 days yes, 1 day no. So you're saying, like, what's the point of discouraging saving? You want to save. Saving is good, but his point was that we can't constantly think that we know exactly what's going to happen in the future, and this is especially important for gold and silver bugs. We know what's going to happen eventually, but to think that we know the timeline of how we're going to get from here to the end game is ridiculous. We don't know. I didn't know that gold and silver were going to crash on Friday. I had no idea. I just knew it was going to happen. I mean, I've been saying that on the Endgame Investor and here on every video, like, it's gonna happen. I don't know when, I don't know to where, but it's gonna happen, and okay, it happened. I don't know if it's over yet. Maybe it is, maybe it isn't. But and then he said, like, we don't know what's gonna happen. We don't know what's gonna happen with Iran. We don't know what's gonna happen with this. We don't know what's gonna happen with the next war. We don't know what's gonna happen with anti-Semitism and Jew hatred. These are things that are going on in Israelis' heads. And then he says, we don't know what's gonna happen with the price of gold. I'm like, whoa. Where did that come from? Like, this guy, like, he's just a guy and he's talking about the price of gold. Okay, fine, good.
No, it's great. Just get it into everybody's head as much as possible. I mean, the sole point is to spread this out as much as possible.
Yeah.
But so as I said, back to gold being in a bubble, it's simply not possible for it to be in a bubble because it is the thing that determines the bubbles of all other things. The bubble comes from fake notes for gold being printed and those notes being put into something like cryptocurrency. So the holders of the derivative, like cryptocurrency, think themselves very wealthy until the crash, when they realize they are not.
Modern markets trade far more claims on gold than physical metal exists. Futures, derivatives, and unallocated accounts expand perceived supply and suppress price until they don't. When confidence shifts, holders of paper claims seek physical delivery. At that moment, the imbalance becomes visible. This is not a conspiracy, it is arithmetic. Rising demand for physical gold often emerges quietly, driven not only by investors but by jewelers, institutions, and manufacturers. When paper confidence falters, price adjustments are swift. Gold's sharp rallies often begin after periods of apparent calm.
I would point out, Phil, one thing I'll point out and then one thing I'll challenge you again. One thing did not move while gold fell about 11% on Friday. Bitcoin price and gold did not move almost at all. Bitcoin now is like 78,000. I think it was down from like 92,000 on Friday, or 90,000, whatever it was. But the Bitcoin price in gold is about 16 and a half ounces, and it was about 16 and a half ounces on Thursday. It was about the same thing. The challenge I want to issue you is, you'll say the price of everything is gold is the price matrix and everything is priced in gold. but gold fell about 10% yesterday, but the prices of everything didn't fall 10%. The prices of everything in dollars is about the same. And I think you'll know the answer, and I'll give you an answer after you give your crack at it.
Sure. It's kind of like if you imagine a pond, right? And suddenly you throw a stone in the pond and things start doing, the matrix of the pond is doing this. Mm-hmm. So yeah, if gold stays down, prices will start to come down again. I mean, prices of other goods as well. In fact, if you look at the deflation,
so gold is the stone, right?
Gold is the stone, right? Yeah, and it's if it moves up, everything else moves up, and if it moves down, everything else moves down as well.
So the dollar is sea level, and gold is the stone that causes the rise. Okay,
exactly. And you can. It takes time. It'll take time. If you were to suddenly remove a whole bunch of gold from the system, and gold got extremely expensive, prices in gold terms would go way up, whether or not we're printing more dollars or not. If you
take gold away, then prices would go way down.
Down. I'm sorry, down. Right, yes, right. You're right. Prices would go way down. If you add a bunch of gold, then prices would go way up. Right, exactly right. But it does take time for these things to filter through. It's just like but I will say this: the market will try, if there is a discrepancy in gold, like if one place has more gold than other places, the market will try to extract that gold as fast as possible. That's why in the gold rush, like all the hookers and stuff ran straight to San Francisco.
What to do? One $300 hooker bot or $301 hooker bots?
Because they're like, well, we'll charge $50 a night in gold terms, and we'll go
like an increase in gold demand equals an increase in demand for sex. That's what you're saying.
Yes. Yeah.
Okay.
Well, I think at least it would maybe increase the supply. Just trying to extract the gold.
Oh yeah. There's more men. Right. They'll just follow the men. Okay, got it.
Yeah, exactly. Yeah. Anyway, we're getting a little bit off topic there, but it's just a matrix. If the price of gold continues to plummet, then yes, I would absolutely expect to see the price of things like food continue to plummet, and we'll end up in a deflationary crash. But I don't think that's going to happen. I think the price of gold is going to, maybe not tomorrow, maybe not even next week, but the price of gold is going to continue rocketing up higher in dollar terms. Mm-hmm. And we should see the price of everything else follow.
So what I would add, not to displace your explanation at all, but to add to it, I would say that the delay between dollar prices and gold prices is what makes the boom and bust cycle work.
Yeah, I think that's true.
Yeah.
I would agree with that.
If there were no delay, there would be no boom. And if there's no boom, there's no bust. The delay, the fact that that things can be so wildly mispriced in gold allows the boom to happen because that's what makes people think that they're rich through market forces that travel up from gold to everything else. And as fans of this channel will know, the price matrix is gold because, for logical reasons, let's take empiricism out of it, that prices began in gold terms, therefore they are still in gold terms because you have to link up back to that past. They're in distorted gold terms, and as the price of gold heads higher, it takes however long it takes for prices to filter from the beginning of the structure of production to the end of it, and that's however long let's say the limiting reagent, the longest thing it takes to manufacture, filters from digging metals out of the ground to mine until you get let's say an iPhone or whatever it is.
I think
that's going to take years. Yeah. It's going to take years. But no, this isn't going to take years. I think the delay here until we feel the bulk of it will probably take months, but not much more than that.
Yeah, the rebuilding is going to take years.
Oh, okay.
I think we'll see.
Yeah.
The trouble, what discourages me somewhat is that it apparently takes a very small subset of people of pretty high IQs to understand this, and so like you just a normal 100 IQ guy is just not going to get this, that gold is money and that he's being lied to. And so the scam can just be perpetrated. I mean, the scam will blow up, but they can start a new scam in the future.
Silver amplifies gold's movements. It behaves partly as money and partly as an industrial commodity, making it more volatile. While silver can temporarily overshoot and correct sharply, its long-term trajectory remains linked to gold's monetary role. Sudden declines, like sudden spikes, do not negate the broader trend. Instead, they reflect leverage unwinding and short-term liquidity needs. Historically, silver's most violent drops have occurred during powerful secular advances. Its instability does not signal weakness, it signals sensitivity to monetary stress.
I don't think it has anything to do with IQ. I think IQ can confuse a lot of people. The smarter
there are a
you
lot of
are, the more
smart
you
people, too.
overthink things.
Yeah.
The biggest problem, I think, is overthinking everything. We're trying to say, like, it's very simple. Prices used to be gold, therefore you have to go back to the past, and therefore prices are still gold. They're distorted gold. But then all of their current experiences get in the way. But the current experiences we've had for the past 80 years are all messed up. That's what people don't want to accept. Right? People overthink everything, and the fact, like, if everyone lived, but this is the importance of culture. If everyone lived in a world where we operated more or less on logic, right? Gold is money, and you can't just create it without distorting the entire structure of production, and that's because that's stealing. You don't do that. Then people would have an innate understanding that gold is money. They don't have to think about it. Problem is that everybody thinks too much now. And that's the problem. So the smarter you get, the dumber you get too.
It just discourages me that, like, we can't seem to just outthink this problem. Like, this is gonna keep happening over time, as it has been happening since ancient Rome.
It's really watching humanity chase its tail. Except right now we're spinning so fast that our brains are coming out of our eye sockets.
My brains are going into my feet.
Yeah, it is. I don't want to say. Is it unfortunate that we are in this time? I don't know. Maybe we're just here to be in this time.
We wouldn't have been sent here, and we didn't. We were sent here because we didn't ask to be born. I don't remember asking to be born, at least. But somebody put my consciousness in this time. Not saying that it didn't exist beforehand, but we're here for a reason. We have a job to do, so let's just do it and stop complaining.
There you go. All right, so I think you agree, gold. It's impossible. The viewer should not worry. Gold is not in a bubble. Can silver be in a bubble? Maybe. I think it's tethered. It's tethered to gold. So
wait. One more question on this. If gold is not in a bubble, then how would you describe what happened on Friday? Not in terms of the mechanics of it, but what is gold going down 10% even mean?
That's a good question. I'm not. We can talk about it during the puke phase of this conversation. The monetary puke.
Okay, so let's just go there.
We just slide. Yeah, we're gonna segue right into it.
We're gonna slide right into the barf. Okay.
Yeah.
Okay, sorry.
Okay,
Anyway.
I'm not sure what exactly caused the puke, but I'm also not sure what has been causing gold and silver to be going up, 10% every week,
No, I'm not even asking about the cause. I'm asking about, okay, given that this has happened, forget about what caused it.
Right.
What is it saying? Now gold is 10% lower than it was yesterday or on Thursday in dollars. Therefore, what does that even mean?
I'm guessing it's a paper sell-off, but I'm not sure. I mean, I don't think a bunch of people are running to with their physical gold in their hands and trying to get it into the dealers, and the dealers were turning them away and dropping their prices.
No, you're still talking mechanics. I'm saying, like, okay, I'll give an example of the sort of answer that I want.
Okay.
And then you can improvise from there. But okay, so if gold is down 10% or 11%, whatever it was in dollar terms, the dollar there was more demand for the dollar on Friday than there was for gold. For some reason, a lot more people wanted more dollars than gold. They had more gold than they wanted. They had less dollars than they wanted. They needed dollars for some reason. If they needed dollars for some reason, we could speculate as to why. It could be maybe they're just stupid. That's possible, or it could be that some of them needed to pay down some debt. that they had, that they didn't have enough dollars and they had a lot of gold or silver.
What happened to the Dixie on Friday? Did dollars spike against other currencies as well?
I don't think it went up that much. I think it was
Okay.
I think it was like a mild rise.
Yeah.
I know that the shekel went up to like 3.1, but that's
Yeah.
the weakest that it's
It
been
could
in a long time.
it could be speculators abandoning their position as well. I mean, there could have been people saying like, gold is gold is going parabolic, so I'll jump on the rocket now and I'll ride it to Parabola Town. And then, for whatever reason, Parabola Town didn't show up and they had their margins to cover, so they got out of their leveraged gold positions. That could be too.
A rapid decline in gold prices does not mean gold failed. It means, briefly, demand for liquidity exceeded demand for monetary insurance. Margin calls, debt servicing, and leverage speculation forced temporary selling. These episodes say more about the financial system than about gold itself. Physical holders rarely rush to sell during such moments. Instead, paper positions unwind. History shows that these events often reset sentiment before the next advance. Gold does not move in straight lines, but its role remains unchanged. Volatility is not a warning sign, it is confirmation.